screenshots of the longs that we managed to take. So those are these, couple of them. Right, so last week we realized roughly 20K in generalized profit in AO, and this was done in either private capital, proprietary capital, or anything along those lines. Either way, first week back in business in September, and we managed to kickstart it with quite the bang. So today I'm going to be walking you guys through pretty much everything. Last week I went 4 for 4 on Euro USD, and pretty much all that we had to do was send one chart at the start of the week that we did on a live call on Sunday. And from that start of the week, we had 1 point of interest, which we were waiting for, let's say, Monday, Tuesday, Wednesday. Monday, we had bank holiday. Tuesday was a lot slower than anticipated, and actually we were waiting for that POI to be met Thursday, Friday. So long story short, absolute banger of a week. And yeah, I'm going to be walking you guys through the trades that my students took, the trades that I took as well, trading up until that POI, and then kind of going through the short that happened right after NFP. It was a very quick, drastic move. You guys might have seen my stories, but a couple pendings didn't even get hit. But overall, can't complain. I'll be showcasing you guys the charts. Before we go into it, I think the most important aspect that many people missed out, especially last week, was just understanding the general picture, right? Taking one little step back and being too fixated, right, on this aspect. So if we bar replay pretty much to the bank holiday that we had on Monday, which was here, a little bit too many people were too fixated on, let's say, going directly into shorts straight off the bat. In my opinion, it was quite clear for me to see that there was room for us to go higher. And often enough, that is something that you notice, especially with, let's say, weak price action and in a period where there is little liquidity, you often see price kind of slow down, right? And that's kind of the most important aspect that we have here, where you can see that I'm trying to figure out where so many people are trying to get this bearish stage right here to then make its way to, let's say, the most obvious OB, which there was on the daily time frame. Kind of missing, let's say, the point between what was really so important, in my opinion, was the fact that we actually induced all of these levels quite a lot. So I'm quickly just making templates here as well as we go about, because I got a new account. Inducements. So bear with me for a second. So these being pretty much the inducements that we had, and people, majority of the people that were, let's say, trying to go short were caught a bit early-handed, especially because we had the most significant break, which was here, in my opinion, right, which was this level, which was previous buy-side liquidity, right, which got taken out quite effortlessly. And at the moment, it was quite self-explanatory, especially when you put 1 and 2 together. You see that there's lots of bullish momentum in price. You can see that order flow is being well respected on the bullish side of things. Is that we are respecting bullish order flow at these 2 injections of liquidity. What is one thing that you notice is that after each inducement, right, that we take out, that we automatically kind of distribute liquidity. So we go from a state of injecting liquidity to a state of seeking new liquidity. So this imbalance that is being left behind, we are obviously injecting new liquidity in order to break previous highs. So we are transacting from areas that are considered to be cheaper to areas where price will be deemed expensive, and that is often enough above those highs. After that is done, we distribute. You can see that price actually goes from more of a erratic movement to more of a liquid transactable movement, especially after that first break right here. And then right after price taps into that proximal on our imbalance, you can see that we get fresh new liquidity to take out this high right there. What the thing that really put our group on a, let's say, higher ground for this week was the fact that we knew exactly what we were waiting for, right? Even though that this order block right here can act as your draw on liquidity, it was a lot wiser to wait for that move done like this, right? It makes a lot more sense for price to firstly react off of those bullish arrays. And you can see that the most obvious bullish array that we had was clearly the imbalance that we left behind here, right? Very badly drawn. But if we were to annotate it neatly, you can get the gist of what we were trying to do here. So we had this inefficiency, right? Because you can call this entire move, these 1, 2, 3, 4 bullish candles, you can call that your liquidity void, where the nearest one is your displacement, is your imbalance. And you can see just how perfectly price action actually respects the narrative, right? Fixes on the narrative. We break that high, we break that previous high, and just like that, we distribute right back into it, injecting further liquidity to the upside, just like that, and then breaking that previous level again. All executing flawlessly on your daily rhythm, right? You don't need to overcomplicate things. Sometimes just understanding that previous daily high and previous daily low is going to be enough for you to grasp the greater concept. What is very interesting is the fact that after we take out such a significant level on buy side liquidity here, it was actually very easy for us to wait for the retracement, anticipate one of two things, right? Either price is going to respect the most near array, which in this case, again, is our imbalance, or we're going to overlap with something that has a little bit more order flow, a little bit more orders left behind. And that is what we call a shift zone, right? A shift zone is a very, very precise manner of understanding the difference between, let's say, a supply and demand zone that just breaks and retests into the opposing array. It's really not rocket science. I wouldn't think about it too much just yet. Right, and what you can see here is that right as we transacted above that previous level, so in this case that buy side liquidity that was so significant that we created what we like to call a shift zone, right? So this being, that area where price slices through, and in this case, it is a little bit less significant as your more preferred shift zones because you don't want to see a body close here. But all in all, it was overlapping with one specific area, right? Your confluences are stacked between two major things. And in this case, right, if you were to draw, let's say, an OTE on this area, just really quickly, you get this area right here, which is exactly pretty much what we wanted to see as our pocket for price to react upon. All in all, the only thing that we wanted to see, and which is what we got, was pretty much this screenshot that I sent right here, where I anticipated that our bank holiday was going to close bullish, which it did, which then gives us the opportunity to then wait for some sort of momentum. And what was really nice to see is clearly how we induced. And this is advanced liquidity concept, so bear with me. We induce the distal line, right? The line that is furthest away of our most recent bullish array. So stick with me now. You can see after that bank holiday right here that we had to sweep these lows in order to inject new liquidity to go higher. And the issue with that being was that we weren't going to respect these levels right here. So there was more intent for us to go counter stage. So our main outlook for that week was higher up point of interest to short further into that order block, into this order block, right? But we needed liquidity to get there. So we needed to fuel a move higher in order for us to go lower. So that allowed us to play these longs that we caught at the beginning of the week. And I'll show you a couple of screenshots of the longs that we managed to take. So those are these, couple of them, not too bad. At the start of the week, swinging into that pocket that we wanted to get, right? And from there, we got our entries to go short. And that is currently still a risk-free position that we wanted to hold and that we are holding over this weekend. So all in all, understanding just your narrative on, let's say, the daily time frame allows you to position yourself in a way that if you can grasp the concepts of liquidity for you to see which direction you want to trade in, you can actually yield the rewards quite nicely. So although this might sound like quite a bunch of gibberish for now, I'm sure that if you stick around, you will get the hang of it. And if you really want to elevate your trading space, you're always welcome at AO. Make sure that you qualify for a call. So either myself or someone else from my team will get in touch with you for a qualification call to see whether or not you will be admitted into the mentorship program. So that's that for today. I just wanted to explain the general direction of a couple key insights, if you could read in between the lines of how we took these trades specifically and how it looks like on paper. And just kind of making sure that you look at the smaller details, which can really make or break your trading career. In this case, it is understanding the significance of patience, right? We waited all week for that POI to be met and to then look at what is order flow doing, right? Start looking at where price is being injected and where price needs to go to in order to complete the bigger picture. The bigger picture in this case of last week was literally so simple of going higher before we had to go lower. We have this entire bullish chain right here, which is so difficult for price to target in one go. We have 3 consecutive bearish candles, leaving behind displacements in between them, which automatically makes that entire move a liquidity void. A liquidity void needs to be fair valuated. In that case, we have interim sell-side liquidity and buy-side liquidity that need to be fair valuated in order for price to continue with its initial direction, which was bearish. I hope you learned something from this video. I want to thank you guys for tuning in on this video. And all in all, I'm very, very excited to welcome new guys into AO, the mentorship program, Anomalies Observatory. And I'll see you guys next week.